Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Kickstart video where I take a look at the three major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. Today's date is February 28th, 2024. Let's get started. The dollar is higher versus the euro. The euro versus US dollar is lower, but we are seeing a bounce back to the upside in this currency pair after the US data today. Technically, the price high that we saw, this is, again, the 4-hour chart. The price high that we saw on trading yesterday came right up to that 38.2% retracement of the move down from this high, going back to the high in December to the low price that we saw in the month of February. The 38.2% retracement came in at 1.0864, and the price got right up to that level and then started rotating to the downside. And trading here today, we fell below the 200 bar moving average on the 4-hour chart and this green line right here, which represents a 200-day moving average. And that's where we're working our way back toward this key resistance level at 1.0828. Stay below that level keeps the sellers more in control. We also fell below the 100-day moving average, and we have moved back to above that level at 1.08108. If the price is able to hold against those 200 bar moving averages and move below the 100-day moving average, the sellers gain more control. Down here, we have the 200 bar moving average, or the 100 bar moving average on the 4-hour chart. That level comes in at 1.07843. Get below that level and opens the door for further downside with this low right here and this low right here and these this swing area right through here as the next key target on the downside to get to and through this line right here, especially at 1.07224, is a key level on the downside on further weakness. But again, we're really watching the 200 bar moving average on the 4-hour chart and the 200-day moving average as resistance now at 1.08287. Stay below that level keeps the sellers more in control from a technical perspective. Let's take a look at the dollar versus yen next, and again we'll look at the 4-hour chart. We moved up to test the highs once again. Let's call this area around 150.75 up to 150.88 as our ceiling levels. I think it's safe to say that. I'm going to kind of get rid of this yellow line right here, but this is a number of different high prices. Let me get on the arrow; it's much easier. A number of different high prices all the way up to that 150.88 level. This is a 2024 high. We need to get above that level. If we do that, then we'll start to pick away at these high prices right here. The high price at 151.89, which was in 2023. If I go to the daily chart and look at that, that high price right here at 151.91 is equal to or within 3 or 4 pips of the high price from 2022. So keep that level in mind. But right now we have this high ceiling for 2024 at the 150.88 level. We need to get above that level to increase the bullish bias. Going back to the 4-hour chart, let's give it a little bit better view here. What we did do this week is we moved down into this yellow area right through here, swing area, and the 100 bar moving average of 4-hour chart remains probably as a support level that we need to get to and through on the downside to increase the bearish bias. If we're able to get below that level, that would increase. That would give the sellers a reason to push lower, and we'd head down toward this 38.2% retracement at 148.97 is the next target. Right now, the buyers are more in control and looking to push toward that 150.88 level. Finally, let's take a look at the sterling versus US dollar. And this pair took a nosedive after breaking below the 200 bar moving average on the 4-hour chart. It looked like it was a little bit up and down here at first before the breaking below and finding momentum. Where do we go? We went all the way down to the 100 bar moving average on the 4-hour chart. We found support buyers, and since then we moved back up and we're ping-ponging in between the 200 bar moving average and the 100 bar moving average. In between sits a 38.2% retracement of the move down from this high going back to the month of December to the low price that we saw in the month of February. And that 38.2% retracement comes in 1.2632, and that's in between the 100 and 200 bar moving averages, which are now our support and resistance levels in trading here today. Break above it is more bullish. If we could also see sellers against this level and push the price back down, in which case we need to get below the 100 bar moving average to increase the bearish bias. Finally, let's for an added bonus, let's look at the New Zealand versus US dollar. The Reserve Bank of New Zealand did keep rates unchanged, and we're a little bit more dovish in their comments, although analysts had expected that that there could have been a hike at the last meeting, at this current meeting, and future hikes. But they seem to discount that idea, and that sent the New Zealand versus US dollar sharply to the downside, as you can see. And where do we stall? We stalled right against the 200-day 100-day moving average. It's blue line is chart at 0.60917. Went just a little bit below that level before bouncing modestly above. Currently trading at 0.6098. If we break below the 100-day moving average, we'll look for the 200-day moving average at 0.60757 as the next target. Alternatively, dip buyers against this 100-day moving average want to see the price stay above that level, in which case we have strong resistance against the 200-bar moving average on the 4-hour chart and the 100-bar moving average on the 4-hour chart. Both those levels come around the 0.6130 level. So there you go. Look at 3 of the major currency pairs, and a bonus look at the New Zealand versus US dollar. My name is Greg Beglowski. Good fortune with your trading. Bye-bye now.